Hello and welcome to this session. This is Farhat, in which we would look at auditing cash disbursement. Now, auditing cash disbursement is a component of the acquisition and payment cycle. What does that mean? It means when we buy something, first, most likely it will go into accounts payable, then we will pay it. Now, in the prior session, we looked at auditing the acquisition transaction. We looked at auditing AP. Now we're looking at the payment, the disbursement. Now, keep in mind, this is cash disbursement. We're not auditing cash. We're going to have a whole cycle auditing cash, the balance sheet of cash. Those are disbursement transactions that are part of the, you guessed it, acquisition and payment cycle, acquisition and expenditure cycle, to make sure that recorded transactions are legitimate, accurate, complete, and properly classified. We look at those assertions. Do the cash disbursement meet those assertions? So the audit process also involves evaluating internal control, performing test of control, conducting substantive testing to verify the accuracy and the integrity of the financial record. Now, part of this auditing cash disbursement, what I'm going to do, I'm going to look at the audit objective, I'm going to look at the internal controls, I'm going to look at some test of control, and I'm going to look at substantive testing. So for each assertion, I'm going to look at all of those to give you a complete idea, because otherwise it'll be very brief, like, cash disbursement. So I'm just gonna give you the full picture from the audit objectives. So what the company should do as an auditor, what we do as test of control, what do we do as test of substantive testing. Now, bear in mind, in the real world, test of control and substantive testing, sometimes they may happen at the same time. We'll do one test and it's a dual purpose test. We don't have to worry about this, but I just want to let you know that sometimes you might say, but isn't this a test of control? Yes, it could be test of control and substantive testing at the same time, or substantive testing and test of control. So this is what we will do, just kind of give you an idea step by step about the cash disbursement. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
Starting with the accuracy of recorded cash disbursement. I want to look at the accuracy. I want to look at the accuracy assertion. Ensure that the amount recorded in the financial statement are correct. I always start with this assertion because it's the easiest assertion to understand. You want to make sure that when we're making a cash disbursement, we are making the cash disbursement for the proper, for the correct, for the accurate amount. Key internal control by the company. What should the company do? Well, the company themselves, they should have internal verification of calculation. So before they submit a payment, they want to make sure they computed the proper amount. If there's any discount, any returns and allowances, they should account for everything. Independent preparation of reconciliation. Whatever they pay, someone else checks on it. Well, that's part of the company. Test of control, we can observe verification procedures. If this is what they are doing, if they are independent preparation of reconciliation, if there's internal verification of calculation. To test their control, we are going to observe to see if they are doing this. We are going to also inspect bank reconciliation. If they're saying they're preparing the bank reconciliation, because part of the bank reconciliation is the cash disbursement. Now again, also bank reconciliation is also part of auditing the cash balance. Again, all these transactions and balances, they are interrelated. But test of control could include that. Now, when we do substantive testing, we're going to compare canceled checks and bank record with cash disbursement. So we're going to look at the cash disbursement entries. We're going to look at how much they are recording. We'll look at the bank record, see if it matches this, look at the canceled checks. We can recalculate selected transaction. We could recalculate. So they do it, then we can do it. We could recalculate part of the substantive testing. So for example, if a company record a $5,000 payment to a supplier, the auditor would verify the amount on the original invoice and check the actual disbursement for accuracy. So this is how we check for accuracy. The other thing we want to make sure is we accounted for all the cash disbursement, completeness of cash disbursement. Well, all valid disbursements are recorded. Now what should the company do? Nothing is missing. Checks are pre-numbered and used in sequence. Remember, every time I told you, pre-numbered, sequence checks, sequence document, pre-numbered document deals with completeness, because this is how you can account for all the checks. Those are all the checks that I issued this period up to this point. Are they all recorded? Are they all accounted for? Completeness. We could prepare monthly bank reconciliation and review, and that monthly reconciliation is reviewed by independent person. Well, we also did this for accuracy. Yes, some of them they serve more than one purpose. That's fine. What can we do for test of control? Verify the sequence of issued check. If they're saying they are checking for sequence, verify that they are doing that. Inquire about and observe bank reconciliation process. Talk to the people that prepared the bank reconciliation. Ask them about role and observe them preparing the bank reconciliation. As a substantive testing, we can compare cash disbursement record with bank statements. Let's take a look at the record, and if it's recorded on the record, it should be in the bank statement, right? Because we're recording a disbursement. That disbursement is either a wire, an e-payment, or a check. It should show on the bank statement. Traced canceled checks to cash disbursement journal. Look at some canceled checks. Okay, let's see if those canceled checks. Look at them. Trace the canceled checks to the journal. Are they recorded? Are they recorded in the journal? Because if I have a check, if I have a payment of $500 for office supplies, I should see the related journal entry in the office supplies. Therefore, it's recorded. All the transactions are completed. An auditor might inspect a company's bank reconciliation and trace canceled checks to cash disbursement journal entries. Maybe select 5, 10, depending on what the sampling size is. Go back and see if they are actually recorded. Occurrence of recorded cash disbursement. Here we're looking at, all recorded disbursement actually occurred and they are paid for, most importantly, legitimate goods and services. So we paid. Yes, we did pay, and it's not only we paid for legitimate services. Key internal control from the company here is proper segregation of duties. The people that authorize a purchase, the custody of the asset, and record keeping should be handled separately. This is part of the key control that the company will have to carry on. Payment requires support and documentation. We don't make a payment unless we have a purchase order, a receiving report, and an invoice from the vendor. Then we can make a disbursement. So this is the company have to do this before we start as auditors. Approval required before issuing checks or electronic transfers. Before we send the payment, we check all of those documents and we get someone to approve the check signing. That's part of the company, key internal control. As auditors, what do we have to do? Observe and interview personnel about procedures. They're doing all of this. Talk to these people. Ask them if they're doing this. Observe them in action. Vouch canceled checks to authorization record. Look at canceled checks and go back, see if those canceled checks or electronic transfer, they do have the proper authorization, because they're saying that's what we're doing. Approval is required before issuing a check. I'm going to look at a check, go back and see if approval was there. This is how I test their control, to see if their control are working properly. Substantive testing, what I can do, I can take a cash disbursement, journal entries, vouch them to cancel checks, receiving report, and invoice. So I would look at a cash disbursement. I'd say, okay, let me see if I have the support and documentation. I'll vouch them back to the cancel checks, receiving report, invoice, and bank statement to make sure it's there. For example, a company issue a payment for office supplies. The auditor would check that the payment is backed by approved purchase order, a legitimate vendor invoice, and a legitimate receiving report. And sometimes show me the product if we did not consume it yet. Show me the product that we buy, especially if we can identify it through some unique number, some unique identifier. Let's assume it's a computer, a serial number. Well, I want to see that as well. Timing of cash disbursement, this deals with the cutoff. I want to make sure that my cash disbursement are recorded in the proper period. If it's in period 1, year 1, it's recorded in period 1. If it's not in period 1, it should be in period 2. Then it should be in period 2. What should the company do on their end? Transactions are recorded as soon as they are approved. So they are recorded in the proper period, and internal verification of transaction dates. And they have some sort of a system that makes sure that they check the cash disbursement and the date to make sure it's proper there. Test of controls, well, inquire about and observe recording of transaction. They're saying this is how they do it. They record it as soon as possible. Talk to these people. They say, do you do this on regular basis always? Is there any exception? Who tells you to do this? Is this part of your job? So on and so forth. And observe transaction. Observe them doing that. What can we do as substantive testing? Compare transaction dates on checks, bank statement, and accounting record. Well, if you're doing this, let me check. Now it's my turn to check. I'll take a look at a check, date that check, go back, see when it's recorded in the accounting record. Should be the same date. Like if they issue a check on March 4th, well, the check should be March 4th. It should be recorded in the accounting record March 4th. But then March 5th, that's not a big deal, but close enough. So a company might attempt to postpone recording a disbursement to January to manipulate earnings. Now let's take a look at this multiple choice question from farhatlectures.com. As I always say in auditing, all answer choices could be correct, okay? But they don't answer the question that's being asked. So you have to be very careful. Which of the following test of transaction is used to verify that existing cash disbursement transactions are recorded? What does that mean? That the transaction are actually recorded. Okay, so let's look at A. Reconciling recorded cash disbursement with cash disbursement on the bank statement. Does this make sure that does this satisfy that the test of transaction is used to verify existing cash disbursement are recorded? No, they are recorded. If you're reconciling the cash disbursement with the bank statement, they must be there. They must be there. Okay? So it's already there. You are not really doing anything. This does not verify for existence because we're saying you are looking at existing transaction. Tracing the canceled check or electronic record disbursement to the related acquisition journal entry. Now, we're looking at canceled checks or electronic transfer to related acquisition journal entry. So we have a canceled check. Okay, we have some sort of a wire. We made a payment. And now we're looking at the journal entry, the acquisition journal entry. We're looking at to see if that one is recorded. Okay, let's look at the question again. Which of the following tests is used to verify that existing cash disbursement transaction are recorded? Is this an existing? Yes. Canceled checks, electronic bank transfer they do exist. Are they recorded? Let me take a look at the journal entry to make sure they are recorded. Because if I compare them to the bank statement, yes, if I send a check out, it's going to be in the bank statement. But is it actually recorded? I'm not sure because I have to look in the journal entry. So between A and B, I can take out A, keep B. Because remember, is it actually recorded? Which of the following tests of transaction where existent cash disbursement are recorded? Okay? Are recorded where? In the books. If I look at the cash disbursement and the bank statement, well, yeah, but if it's a cash disbursement, it's going to be in the bank statement. But if I look at the canceled checks and look to see if it's in the journal entry, I am testing whether it's actually existing transaction actually recorded. C, testing the clerical accuracy by footing journal and tracing posting to the post general ledger and accounts payable master file. Yeah, we can do that, but this is looking for accuracy and making sure we are posting properly. But this is not about determining that existing cash disbursements are recorded, because clerical accuracy is just basically making sure we're looking at an existing transaction and make sure it's correct. and make sure it's posted to the general ledger and the account payable master file. Tracing the payment information to the treasurer disclosure file. Disclosure is we're making sure if there's any disclosure, it's being disclosed appropriately. So this has to do with disclosure. So B is the best answer choice because you're looking at the checks and making sure that check or that payment is actually recorded in the record. So this is to verify that cash disbursement are recorded. Again, auditing questions are tricky. You have to have good understanding. What should you do now? Go to Farhat Lectures to look at additional multiple choice questions, including AI CPA questions, college level questions. That's going to help you whether you are an accounting student or a CPA exam candidate. Invest in yourself. The best investment you can make.